Let's talk about single member LLC quarterly taxes. Okay, and this is an important topic to discuss, especially every quarter or around the tax time at year end. So here's the overview I want you to pay attention to. So when we talk about estimated taxes, in simpler terms, the rules for estimated tax payments vary by business type. And for single member LLCs electing to be taxed as sole proprietorships, if your anticipated taxes to be paid are $1,000 or more, you'll need to make estimated taxes. So again, the threshold here, $1,000. An exception is if your withholdings and tax credits are equal to your prior year's tax. In that case, you do not need to make estimated tax payments to the federal government. And so when we talk about estimated taxes, those are broken down into 4 payments made throughout the year. So April 15th, June 15th, September 15th, and January 15th. And so once in the system, estimated payments vouchers will be sent by the IRS at the end of the tax year. You are responsible for paying estimated taxes whether the IRS vouchers are sent or not. And so as a single member LLC, you will file Form 1040-ES, and the IRS recommends using Form 1040-ES to calculate estimated tax payments. You can make payments using the quarterly vouchers, or you can use the electronic federal, the EFTPS, so electronic federal tax payment system. And one thing I need to insist here is that you are also responsible for tracking your income. In other words, your pay. The IRS is not going to track it for you. So you need to have a way, either if you're having a 1099 or you're having a W-2, you got to have a way to actually track your income. Paying too little in taxes can lead to penalties for underpayment. Paying too much means a lost opportunity to use the money to invest in your business. So using the services of a tax specialist to advise you on tracking, recording, and calculating your earnings and deductions is recommended. As a matter of fact, it really depends upon the revenue you are generating. If you are generating, let's say, 6 digits in your single member LLC, it's just better to delegate tax and bookkeeping to a specialist. Boss, welcome back to the show. It's really a pleasure to have you here. Make yourself comfortable. You are going to enjoy today's conversation. Now let's talk about the steps for filing as a single member LLC. You need to use Schedule C to report business income and loss. This form is then attached to Form 1040. That's number 1. Number 2, you need to pay the self-employment tax if the net gain from the company exceeded $400 or more in the tax year. You need to complete Schedule SE and attach to Form 1040. Step number 3, you need to report employment taxes if your LLC pays employees. Here, you need to file Form 941 quarterly if the withholding is less than $1,000. Otherwise, you need to file Form 943 at the end of the year. So the bottom line here is that when we talk about LLC and taxes, you need to understand a single member LLC has a default classification as a disregarded entity. That's how the IRS calls single member LLCs. Because of this, the owner of the LLC is not considered an employee. Therefore, any income received from the company is not a salary. It is a draw. Okay, so the thing is that the IRS considers the single member to be self-employed. Any income received is considered earnings from self-employment. An advantage of an LLC by someone who has a day job and starts a side business is that the losses from the LLC can offset the salaried income. In general terms, basically profits and losses are calculated by deducting the business expenses of the LLC from its revenue. A business expense is one that's considered to be ordinary and necessary, and one that has a reasonable business would use, right? Don't try to really start playing games because the IRS will come and audit you. You do not want to have that. For example, a home-based courier business will not be allowed to deduct the payments for a leased Ferrari because it's not ordinary, nor is it reasonable that you will drive a Ferrari to deliver items. A necessary item is something the business needs to operate. It doesn't mean the item must be indispensable, but it does need to be helpful and appropriate for the enterprise. And one thing I need to say here is that the federal government taxes 92.35% of the net earnings from self-employment. Up to a specified threshold, self-employment income is taxed at a rate of 15.3%, This breaks down to 12.4% for Social Security and 2.9% for Medicare. And for self-employment earnings above the annual ceiling amount, only the 2.9% Medicare tax is used. Boss, I want to quickly remind you of today's topic. We are having a conversation about single member LLC quarterly taxes. Let's talk about tax filing forms. So the thing is, when filing annual federal tax returns, you got to use, first of all, you got to use Form 1040. That makes sense. But you need to also file Schedule SE. So this is a self-employment tax. Information from the SE form includes information from Schedule C. So this form is also needed. Okay, so if you're thinking about filing Schedule SE, have your form Schedule C ready. The IRS uses Schedule SE to compute and report the amount of the tax obligation for self-employment earnings. There is also a short form for Schedule SE if self-employment earnings are less than a specified amount, along with additional conditions. For the most part, what we have seen in our research is that a single member LLC cannot avoid paying self-employment taxes. It is possible, however, but this is a big however, if the single member LLC is reclassified as a corporation, a C corporation that is. Okay. Under certain conditions, an individual member of a multi-member limited liability company can avoid self-employment taxes without the need for reclassification, and converting an single member LLC to a multi-member LLC with either a non-member manager or with passive members can reduce or eliminate self-employment taxes. So this is one of those things where you need to really understand. Now, if you have an additional question, please let us know in the comment section, and one or two or three of our team members will review your question and get back to you. When you ask questions, please, you want to include the city and state where you are writing from, so we have a clear idea which LLC state laws apply in your case. And if you also need help with filing single member LLC quarterly taxes, you can really just reach out to a professional. So you can have an enrolled agent, an EA. You can reach out to a tax attorney, or you can reach out to a CPA, a certified public accountant. Now let's talk about when your quarterly taxes are due for your LLC. If you are a new entrepreneur who is, let's say you're starting a business for the first time, one of the biggest differences between being a business owner instead of being an employee is how you pay taxes, which includes estimated taxes. So when you really hear the terms estimated taxes, those are essentially payments made in advance based on what you estimate you will make during the year. If an employee, like in an employee-employer situation, your employer would actually withhold income and payroll tax to pay the IRS on your behalf. When you own a business and are self-employed, you need to make that payments yourself through estimated taxes. And so you need to really understand, when is Form 1040 ES due? Well, I want you to look on the screen here. Here is how the Form 1040 ES looks like. But I think I've given you the dates before, but I'm going to repeat them just in case. So really, you need to have 4 estimated tax payments every year. And so April 15th, June 15th, September 15th, and January 15th of the following calendar year. And so you make quarterly tax payments during the current tax year that you are paying taxes for, with the exception of January being the next calendar year. And also be aware that the April 15th quarterly tax deadline for 1040 ES estimated tax payments is separate from the April 15th deadline to file individual tax returns. Okay, those are 2 separate processes here. You have to file your individual tax return on or before April 15th tax day, but you also have to make your quarterly estimated tax payments for the current year's first quarter income on that day as well. So depending on the year, some of these deadlines might shift a bit depending on days of the week or bank holidays. So you want to check the IRS websites for more information. It's really important to understand also you need to understand that those dates are changing, but not only at the very specific level for your LLC, but also at the general level. Boss, I want to quickly remind you of today's topic. We are having a conversation about single member LLC quarterly taxes. Let me go a little granular in the discussion here. Do single member LLC have to pay quarterly taxes? Or said another way, do they even pay quarterly taxes? That's a quick question. Now, when we talk about paying taxes here, you need to understand the LLC as a company does not pay taxes, right? If you are a single member LLC, the IRS looks at you as a disregarded entity. And basically, you're not paying taxes at the company level. You're paying taxes on your Schedule C. Same thing if you are a multi-member LLC. You do not pay taxes at the corporate level. You need to understand LLCs are considered pass-through entities that do not have to pay corporate income tax. The LLC's business income simply passes through to the individual tax return of the business owner. As the business owner, though, you will have to pay estimated taxes on your estimated earnings from your LLC. And you also have to file a Schedule C form at tax time to report your profit or loss from your business. And how much money should you reserve for estimated taxes if you're self-employed? It really depends on a lot of things. But as a rule of thumb, your exact tax liability will depend on where you live. Some states have higher state income taxes than others. Some states have no income tax, and so it depends on where you live and how much money you make. A general rule of thumb is that you should try to save 25 to 30% of your income for taxes. A smart way to do this is to take 25% to 30% of each payment you receive and set it aside in a business savings account. If you pay, and this is an important element here, if you pay too little in estimated taxes, there can be underpayment penalties. So you always want to follow the 20-30% rule to ensure you are estimating correctly. And again, when we talk about estimated taxes, you need to understand that you got to really think about federal income taxes, but also state income taxes. There are the rules for states are different depending on where the LLC operates. Some states might want you to really sort of pay some self-employment taxes every quarter or every 6 months or every year, once a year. It really depends on the state. So please inquire with your state tax authorities about what you should really do. Now let's talk about having a side business and filing estimated taxes. The question is, a lot of folks are a little confused when it comes to estimated taxes, because they think, well, I'm running a side business and the business is not really big right now. It's not really complex. Do I need to pay estimated taxes? Well, the thing is, even if you are earning just a small amount of income from your side business, you are required to report that income. If you want your business to be legitimate and not classified as just a hobby, it's a good idea to start reporting income from your business and paying taxes on it as needed, even while you are still moonlighting or doing a side hustle. The IRS says that if you expect to owe at least $1,000 in tax for the current year, minus your withholding and refundable credits, then you should make estimated tax payments. The bottom line here is that it really depends upon the specifics of your business, right? And whether you have a side business or not, if the business is making money, then you have to pay taxes. It's one of those things where you have to think it's not about the business being a side business or being a main business. It's about how much the business is generating, and the IRS just wants to have its fair share of your profits. And again, when we talk about the IRS, we also are talking indirectly about state tax authorities, because if your state has an applicable income tax, then you have to pay taxes twice or three times. Very important. So the threshold is $1,000. If you expect to owe at least $1,000 in tax for the current year, minus your withholding and refundable credits, then you should make estimated tax payments 4 times a year. And before I actually close this section, I need to say that the easiest way to do this is to actually have an accountant. In other words, you just let somebody else worry about your taxes. unless you know exactly what taxes you owe and how to really file everything. Because the bottom line is you do not want to really be quote unquote distracted or frustrated with the tax situation instead of running your business, right? Your goal should be to run the business profitably, not to do taxes on the side. Now, can you file your own business taxes? Of course. You don't have to hire an enrolled agent, a tax attorney, or a CPA to do your taxes for you. You can file your tax returns and make estimated tax payments yourself, whether you want to file returns on paper, the old-fashioned way, or use tax filing software. The IRS has actually an EFTPS, so an electronic electronic federal tax payment system where you can enroll and pay your taxes due. Okay, so bottom line is the IRS is just trying to make it easy for you to really pay your taxes. One thing I need to say though, as a business owner, your taxes are more complex than they are for an employee. You might be better off working with an accountant to do the heavy lifting for you. Working with a tax professional can help you maximize your tax-deductible business expenses and minimize your tax liability. You also have peace of mind that your taxes were tracked and filed correctly. Okay, so it's one of those things where you have to really see what really works for you. The one thing I want to say here is that if you have expertise in taxes or accounting, or if you have if you yourself, if you are a CPA or an EA, or let's say if you're a tax professional yourself, then you can do your own taxes, not a problem. Okay, but remember, it's a matter of your time versus the risk of if anything goes wrong, you can't really go back and talk to someone if you did everything yourself. That's why it's always important to separate tasks, to separate work streams. Okay, so anything about the LLC, you just outsource it. So if something, God forbid something were to happen, you can go back to the accountant and say, listen, I give you all the paperwork. How come I'm not getting anything accurate here? Okay. And one thing you also need to say here is that you need to understand what your state tax laws are when it comes to LLC taxation. Some states are pretty straightforward, while others are more convoluted. So it's one of those things where you have to be really clear as to what works for you, or at least what can work for you. You can also reach out to the state tax authorities via email or phone and ask questions directly, and they'll provide answers. Thank you so much for your attention. I really appreciate it. In today's conversation, I spoke to you about single member LLC quarterly taxes. So I talked to you about the estimated taxes, the steps for filing as a single member LLC, and taxes and tax filing forms. Thank you so much. God bless you. I'll speak to you another time. Until then, remember, stay marvelous.